In the past 6 months, Adobe stock has been on fire and not the good kind, with the stock being down about 26%. But the company is one of the few who have successfully integrated AI into its products, allowing for some pretty incredible results. So, what in the world is going on with Adobe stock and what is a reasonable stock price prediction? In this video, you will find out. Okay, so Adobe just released their Q4 earnings report, and as you can see, this is the visual way to represent the data, and there's a lot of very positive things. For example, here we can see that the document revenue went up 70% year over year. But most importantly, what's really interesting about the company is that the company beat expectations from Wall Street, both in terms of revenue and also in terms of non-GAAP earnings. So as you can see, revenue was expected to be 5.54 billion, and the company actually delivered 5.61 billion, which is a very positive thing. And in terms of non-GAAP earnings, the company delivered 4.81 per share, and the expectation was 4.67. So overall, the company had a great quarter. And like I said, you can see the visualization of this. And what's most impressive is that the company now has more adoption of its AI generation products. In this case, the star, of course, is Firefly, which works really well with Photoshop and with different tools that the company offers. And as you can see here, it generated over 16 billion generations, which is an absurd number. That means that a lot of people, a lot of different users, and a lot of generations were used by these users. And this is very positive because these AI credits can also be monetized by the company and provide some new opportunities. But the crazy thing is that the company's stock price actually went down despite these positive results. And the reason for that is the company actually lowered the expectations for the future quarters. So as you can see, it says Adobe said it expects revenue from the fiscal quarter of 5.63 billion, between 5.63 to 5.68, and the analysts were expecting 5.73 billion in revenue, even though, like we said before, the results came ahead of the estimates from Wall Street, and this led to a drop in 14% in terms of the stock price. Now, I saw an interview of the CEO of the company, and what he said in terms of the guidance is that a lot of it has to do with the foreign exchange fees that are going to be lowered and therefore lower the company's revenue. But let's go deeper to see if there are any other areas of concern to worry about. In a company like Adobe, one of the most important things to understand is where the revenue is coming from. And this is because the company has tons and tons of different software products that it offers. So as you can see with Y-Sheets, which is an add-on that works on Excel and Google Sheets, I can get the breakdown of where the revenues are coming from right here on my spreadsheet. And as we can see, we have the breakdown in terms of a percentage. And right here, we have a very clear winner, which is the digital media. So as you can imagine, this includes all kinds of the most popular products that Adobe offers. So this, of course, includes the ones that you can see here from the annual report: Photoshop, Adobe Express, which is a new product that is worth checking out, Adobe Premiere, After Effects, etc., etc., etc. So when we do the price prediction, it is very important to consider what's going to happen to this particular segment of the business because it represents the biggest part. And then this other business, Adobe is not really well known for, and their products, according to my research, are not the best, and they're in very competitive markets. Now, with that being said, one of the biggest areas of risk for the company that you have to consider is the competition and how strong the competition is getting, especially now with the recent move that took place in the marketplace. So I don't know if you're aware, but Affinity is a tool that provides many different tools that are essentially a competitor of Photoshop and some of Adobe's other photo photo editing products. So as you can see, they have the designer too, then they also have the photo, and then they also have the publisher software. Now, the great thing about these tools is that unlike Adobe, you don't have to be subscribed to an annual or a monthly price. All you have to do is just pay the one-time price, and then you have access to the tools for as long as you want. And as you can see, this company does have tons and tons of users all over the world. And what's even worse about this is that, okay, every company has a competitor, but what about when one of your biggest competitors join forces or buys the other bigger competitor? Now you have a real threat to worry about. And this is exactly what happened to Adobe, where Canva actually purchased Affinity to bring professional designs tool to every organization. So if you don't know, Canva is a really popular tool that allows anyone without basically any skills in terms of like graphic design to create some pretty good, helpful graphics to post on social media and stuff like that. And they're becoming a bigger and bigger competitor of Adobe. And so the bad news about this is that not only are they a big competitor, but now they also purchased another one. So now they're becoming a real threat to Adobe. And the worst thing about this is that Canva knows really well how to attract users for free and then convert them to paid customers. So with this acquisition, I'm sure they're going to bring significant changes that can really shake up and affect the results financially of Adobe. But to counter these things that are happening in the marketplace, Adobe is not dumb. And so what they've done is they've developed some competitive solutions to the competition. So in this case, one of those is Adobe Express, which is essentially like a competitor of Canva. And you can see some of the videos where it does some very similar things. Now, the advantage of this tool is, of course, that it integrates very well with some of the other tools like Photoshop and whatnot. So that's very positive. However, what I found is that it's not as easy to get started with as Canva. And then the other thing is that they do want to really upsell you into some of the other products, which is not what Canva does. And I think that's why perhaps the strategy may not work as well as Adobe is expecting. And then the other thing is that they've also reduced their products or created different offers based on the different persona who buys these products. So as you can see, this is their pricing page and this is the price for individuals. The biggest complaint that I found online about the company's products is how pricey they are. Now, they are very valuable, so it makes sense that obviously you have to pay the price for this, but I do think that for individuals they should lower the prices even more to be more competitive and to get people started using these tools. And once you're used to these tools and you're really proficient in them, then it becomes very hard to take away those customers into some other tools. So I think that's something the company should really look into. Now, the pricing for businesses and stuff like that, you could rack up the price because they can afford to pay for these prices, and it actually makes sense because they're actually generating commercial value out of them. Now, moving on to the company's price prediction. First, I analyzed a whole bunch of the different variables that really matter, including obviously the financial statements where the company has a good financial position. But the thing to note is that right now the company does seem to have the lowest price to sales ratio that it has in quite a long time. So as you can see right here, and then also you can see this on a quarterly basis where we can see the price to sales ratio right here. And you can see right now is actually not a bad point to enter in this particular stock. We could also use the PE ratio, but the company's profits are kind of more volatile. So that's why I'm deciding to use the price to sales ratio as the metric that we're going to evaluate for the price prediction. The thing to note as well is that the markets that the company participates in, we have the creative software space and the digital marketing software. The digital marketing has higher compounded annual growth rate expected at 17%, and the creative software, it's only like 8%. So this is not the biggest positive news. So in my assumption, I assume a 10%. I mean, you could even move it to an 11% just because remember the majority of the company's revenue comes from its creative software, and then the price to sales ratio is really what matters here. So we have the company's revenue on a TTM basis obtained by Y-Sheets, which you can check out as well. And then here we do the projection based on revenue growth of around 11%. Note that in the past, this has been very consistent for the company. It has very big revenues, so for them to continue to grow this pace becomes harder and harder over time. That's why I had originally 10%. And then the price to sales ratio is the price at which we're gonna sell, which in this case I have 8.60, which is a little bit conservative, but I think is pretty reasonable for this particular company. The discount rate for today's interest rates I have at 12%. And as you can see, this gives us a present value of $383 per share. Right now, the stock price, I'm gonna refresh this. This comes from White Sheets. We're gonna see in real time what the stock price is, which is 420. So this represents an upside or downside percentage of -9%, which means this is not the best time to get into this particular stock. So what I would do and what I would recommend, again, this is not financial advice, so make sure to do your own research, is to wait until the company's stock price drops a little bit, perhaps to like the 385 range. I think that's when you can be sure that you're getting in at a good price. I've also done a lot of research on what other analysts are saying and also looked at the technicals, and it's looking like the company can definitely reach this level. So I wouldn't get in right away. I would wait until this moment, so that way the upside down percentage is also going to be up and you can be sure to make a return. If you've enjoyed this video, make sure to subscribe to the channel. Let me know in the comments below what you're doing about Adobe stock, and I'll see you in the next one.